China stimulus boost, European stocks rise after a blistering rally in China and Hong Kong as Beijing unleashes unprecedented support, including a rate cut and the biggest package yet to boost the housing market. A major escalation between Israel and Hezbollah. Israeli airstrikes kill nearly 500 people across southern Lebanon in one of the deadliest days of fighting in 20 years. Plus, top officials square off as UniCredit becomes the biggest shareholder in Commerzbank. German Chancellor Olaf Scholz calls the move unfriendly. We check in on European stocks then with China and the action coming through on the stimulus front and centre. China turbocharging global markets, at least for now. The question is, will this be sustained? A focus on the automakers, luxury and basic resources all getting lifts on the back of the stimulus that's coming through from Chinese policymakers. And that's before you get the fiscal response as well. This is focused on monetary policy. The CAC 40 over in France getting a lift from the luxury space, up 1.4% so far in the session. The UK, the FTSE 100 getting a lift from basic resources. The miners are rallying, up 0.5%. And over in Germany, the DAX, you look at the auto sector, the last time I checked, Mercedes-Benz was near the top of the list. The DAX getting a gain and a boost from the auto sector, again linking to the China story, up 0.8%. Let's flip the board and look cross-asset. Euro-dollar in focus as well. The soft data out of the Eurozone, to what extent will that be offset by the strength, if there is some renewed strength of the Chinese economy? Will that come to the aid of the Eurozone as you look at the challenges in that economy? Markets are starting to increase their bets around when the ECB cuts. October, it seems, is now in play. Not a certainty, but in play. Markets pricing in close to 2 full additional cuts by the end of the year. The benchmark US 10-year on the back of those FOMC officials, Austin Goolsbee saying there will be multiple additional cuts coming through into the next year. In focus as well, 376. Euro-dollar out 111. Brent 74, close to $75 a barrel. Of course, the Middle East tensions, but also the demand impulse out of China in focus when it comes to oil. And iron ore is rallying in the session. That's lifting basic resources up almost 6%, $94 per tonne for iron ore. Lines crossing right now. We talk about the health of the Eurozone economy with the focus, of course, squarely on Germany, given the PMIs that came out yesterday. Germany, the September Ifo Business Confidence Index coming in at 85.4. That is pretty significantly below the estimates of 86. Expected to cool. That was the expectation, but it's cooled more or come in lower than the estimates at 85.4. We know the challenges, of course, around the auto sector in Germany. We will be speaking to the president of the Ifo Institute in the next 10 minutes for reaction. The show coming up in just the next couple of seconds.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Good morning and welcome to The Pulse. I'm Tom McKenzie in London, standing in for Francine Lacqua. Now, European and Asian stocks have rallied, as I mentioned, after China's central bank unleashed a raft of policy support for the economy. It is the government's broadest effort yet to hit this year's GDP growth target of about 5%. Let's get more in terms of the reaction and bring in Bloomberg's Jill Deesis standing by with the details and the implications. So, Jill, a flurry of rate cuts, liquidity support measures announced today. What is most likely of all the measures that we've seen announced today from officials in Beijing, primarily the PBOC, to move the needle on the growth picture of China?
Oof, yeah, Tom, I mean, what a flurry of different actions here. I mean, you had these rate cuts that were announced. You had, this exploration of a new stock stability fund. You had some additional liquidity support to the tune of around $113 billion worth coming out in terms of some monetary policy support there. But I really think you kind of have to look at the property sector measures here as, some stuff that actually does seem, in combination with everything else, a bit materially different. I think, we did see officials here today announce that they were going to lower borrowing costs on mortgages worth somewhere around 5.3 trillion yuan. So I mean, you've really got sort of that massive amount, or dollars rather. You've really got that massive amount that's kind of coming into play here. You've got some additional measures that you're taking to kind of sort of ease the property crisis for China. I think that's probably what really makes the most sense here in terms of stuff that's actually going to help alleviate some of the property crisis. crisis there. But I also think, Tom, that the bottom line here is that the the transparency that you've really had from officials today, this hour and a half long press conference that they used to detail a lot of stimulus, the potential for remember more measures to come. PBOC Governor Pan Gongsheng actually talked a bit about how they could see rates lowered in the future. He kind of telegraphed that a little bit. I think all of that in combination kind of shows you that Chinese officials are really changing the calculus here. And while this might not be some kind of extremely super massive bazooka stimulus, it's still incredibly significant and potentially foretells something more to come.
And the markets are reacting. We've seen that strength coming through for the benchmark CSI 300, adding more than 4% over in Hong Kong, where you are at the HSI, up a little over 4%. I guess the key question is, when we speak to the analysts, when we speak to those engaged with the China story at this level, Jill, what is your sense that they think this could be sustained, or is this all going to fizzle out in the next 24 hours or so?
Yeah, Tom, the analysts that we're talking to are saying that, look, we've seen this kind of thing before where you get some big announcements and then it does kind of fizzle out. It's really going to depend on whether there's additional measures announced within the coming days and weeks to actually see some sort of a, sustaining growth there. I will say what was actually kind of interesting to me off of the press conference this morning is that stocks got a little bit of a boost at the beginning, but then kind of paired gains. But then it was really, some very, very late in the game stuff at the end of the presser on that stock stability fund that they're exploring that kind of, made everything jolt back up again. Now it kind of seems like investors are digesting what they've actually heard and trying to decide whether or not that's actually moving the needle. I think, though, what we'd have to see, Tom, is something that actually tells us that in addition to everything that's going to be announced, that was already announced today, is there anything more wholesale? Is the finance ministry going to announce anything, on the fiscal side to sort of support things? We've heard a lot from the PBOC. Is there anything more comprehensive that is going to add to this drumbeat of new measures that could help the economy?
OK, already looking for more from officials in Beijing. Jill Deeses, thank you very much indeed on a big day for China and the response from policymakers and the key question as to whether or not it will be enough, of course, to turn around the consumer sentiment, the real estate sector, and continue to put a floor under the stock market of China. Let's switch focus right now. We've been hearing, of course, from a number of FOMC officials in the last 24 hours or so as well. A handful of Fed officials have left the door open to more large US interest rate cuts. Think 50 basis points, of course. It comes as leading hedge fund managers and investors gather at London's Wembley Stadium for the 5th annual Liquid Alternatives Summit. Snappily named. Bloomberg's Danny Berger is there with a guest. Danny.
Tom, thank you so much. And I'm so glad you guys just finished talking about China, because that is really important here, too. I'm pleased to say that I'm joined by Karim Moussalem. He is at Selwood Asset Management, CIO of Equities. Karim, thank you so much for joining this morning.
Thank you for having me.
So I know you play in the pool of European equities, but China exposure, of course, is really consequential. I know you like commodities, too, so maybe you can take a victory lap here. But how big of a difference does it make this morning to hear the news of more stimulus coming from China?
Yeah, I think it's great to see, and it's something that's been that we've been waiting for some time. It hasn't come through until this morning. And I would say there's a number of things at play here with commodities. Obviously, there's a short-term boost to prices that we're seeing this morning. But I kind of like to make a difference between some commodities that are very exposed to the property sector, and I think that's going to be in a very tough spot for many, many years to come, and other commodities like copper, for instance, which are critical for the energy transition, the decarbonization of the economy, and even that commodity has been sort of has been under pressure, all of this year, because of this negative sentiment towards China.
So does this change anything in terms of your exposure? You already have it, but you want to double down now.
No, I mean, we've already had a decent amount of exposure to some of these commodities, not the whole complex. I think oil is in a different spot because of all the spare capacity, especially within OPEC+. As I said, copper is in a very different place, but all of these commodities have traded almost, one for one. And I think that news today will probably affect sentiment to some extent, which is very good for us.
Within the markets, there have been a couple themes that have been sustained, China being one of them, but elsewhere, a lot of things swinging back and forth. You have, for example, big stocks, some of the biggest in the world, like NVIDIA, trading like penny stocks. This type of volatility, do you think that this is the new norm for this market, to have such big names trading hundreds of billions of dollars a day?
Look, it's amazing the difference between the US market and the European market. You have a depth of liquidity, lots of options activity, retail activity in stocks like NVIDIA, as you mentioned. Europe is a very different market altogether, with much less liquidity, much less depth. But I think what is really fascinating is to see how much the market has changed over the last 20, 25 years, particularly in Europe, with much more of the shorter term players that dominate the price action on a day-to-day. And those type of investors are very focused on short-term price momentum and earnings momentum. And I think that's been the most fascinating thing to watch, because there's very few investors like us willing to take a slightly longer-term view.
Does that make your job harder? Because you're doing equity long-short. You're not doing those types of strategies. Is it harder to be an equity long-short manager today?
It's harder when you're trying to show steady performance and steady returns month in, month out. Our focus is on picking stocks and taking a 1 to 2 year view. So obviously that comes with a little bit more volatility. But I do think that ultimately the price is bigger if you're able to hold on to your positions. Hence my call on copper, Glencore in particular, which I think is an outstanding stock to own in this kind of environment. But it's been pretty difficult to own this year.
Are clients receptive to that message?
Yeah, look, I think there's a market for everything, every strategy for everyone. Obviously, if you're looking for very short-term tactical opportunities and dislocations, you have a whole host of funds you can look at. If you're looking to play, again, the longer game, there's very few of us left in this market, and I think that's exciting.
It's an advantage because there's not many of you. But do you think that this is a permanent shift, that you have these multi-strat pod shops who do things like volatility, these types of strategies, trend following? Is this a permanent shift that this is the new star breed of hedge funds, and unless you're that, you can't really launch a new hedge fund?
Look, I think it's become incredibly difficult to launch a new fund, and we've seen it. Having launched 2.5 years ago, it's been a long road to get to almost 200 million of AUM today. But I think ultimately it's a marathon, so you can't look at it, day to day. And I think if you deliver good returns, ultimately money follows. But I do think ultimately that this lack of managers taking longer-term views presents obviously some risks that we need to manage, but also some incredible opportunities for the future.
Do you think it's also harder to run a fund in London, and maybe even launch a fund in London, when there's so much uncertainty around taxes and what the new Labour government will bring? Yeah,
but I think it's true for the whole of Europe in general. We have a lot of regulation, maybe too much regulation in some cases. ESG for a period of time really dominated anything you could do, and it attracted a lot of capital to funds that were doing a bit of greenwashing as opposed to really changing the world for the better. I think some of that has shifted a little bit. But overall, in Europe, we lack the depth of capital that you have in the US, that you have in Asia. So it is definitely more challenging in Europe than in the US, but not just because of tax reasons.
Well, at least we're not hearing about offices being raided for greenwashing and that sorts of thing. So I think that's an improvement. Karim, thank you so much for joining this morning. It was really a pleasure to talk with you. Tom, that is Karim Moussalem of Selwood Asset Management.
Danny, great conversation. Thank you very much indeed. Danny Berger, of course, at the Kepler Hedge Fund Summit. There's plenty more coming up. Stay with us. This is Bloomberg. Welcome back. Chinese stimulus powering the moves higher in terms of European stocks, with a particular focus on the sectors heavily exposed to the world's second largest economy. Think autos, think luxury, and think, of course, the mining sector as well. You can see Anglo-American, currently the top performing stock in Europe, gaining more than 7%. You look at the iron ore price rallying on the back of the stimulus being pushed through, and the package of measures to support China's beleaguered real estate and property market. Iron ore is up almost 6%. Copper getting a pop as well, up 1.5%. That is driving basic resources higher. Anglo-American, a key beneficiary at this point. Rio Tinto also in the mix, of course, adding 222 points, up 4.6%. LVMH in the luxury space also getting a lift, along with its counterparts and competitors like Hermes. LVMH up 4.2%. And there's Mercedes-Benz in the auto sector, the DAX and the CAC, the national indexes getting a lift from the different sectors to which they have that China exposure. Mercedes for some time in a while has been able to say this, getting a break and up 2.2%, again, on expectations that maybe the sentiment around the Chinese consumer will start to change, and maybe on the back of these measures, they will feel they have a little bit more cash in their pockets to be able to spend on some of these items. That remains a key question, of course. Coming up, we're going to take a closer look at the German economy following that Ifo survey data with Clemens Fuest, the Ifo Institute president. That conversation coming up next. This is Bloomberg. Welcome back. Now, Germany's business outlook has again worsened, reinforcing fears that Europe's biggest economy is in a recession with no quick rebound imminent. The president of the Ifo Institute, Clemens Fuest, joins me now for details on that survey. Clemens, thanks for your time. Always appreciate your insights. So softening again across this survey in terms of the Institute's expectations gauge dipping to 86.3 in September. What are the biggest headwinds for this European economy with Germany at the core right now?
Well, I would say the key weakness is really manufacturing, which is so important for the German economy. We see with this weakness across the board, really, machinery, the chemical industry, electrical equipments, and the car industry. And companies are telling us we are lacking orders. Now, on top of that, we have weaknesses in the service sector, especially in those parts of the service sector, unsurprisingly, that are related to industry like logistics, engineering services, and so on. So the overall picture is bleak, really.
The overall picture is bleak. And in prior conversations, we've talked about the divergence between manufacturing and services. And as you say, they are now, worryingly, starting to align a little more. When do you expect, are we getting to a point where a floor is being put under the slowdown in manufacturing, or is there further pressure to go there? And where are we in terms of the declines around services?
Well, the trouble is that we are seeing a decline in investment in manufacturing. And as long as we see that, the worry is that the production potential of this industry is declining further, and as is production and value added. So it's not quite clear when we will be reaching the floor. Of course, partly these are external conditions, exports to China. And depending on the Chinese economy, that may improve in the future and may not. But within Germany, it's difficult to see a floor. It's really a weakness of investment in Germany. A lot of companies are producing for domestic investment. A lot of companies are produce equipment for investment, and that's not stabilizing. What we also see is a very low level of investment in construction, and that also has an impact on manufacturing, of course, because a lot of companies are producing equipment for them. If construction stabilize, that might help manufacturing too, but none of that is in sight at the moment.
Is a recession in Germany now your base case?
I think we cannot exclude that we'll end up with a negative growth number this year. A lot will depend on consumption. That could be a countervailing effect. But so far, we do see rising disposable incomes, but that doesn't translate into consumption. So the savings rate has increased, suggesting maybe that people are worried about the future. If that changes during the year, we might escape a recession, but in any case, the German economy will stagnate, and with these numbers coming in today, it might even be a minus.
Does the ECB need to act more aggressively? Does an October cut, a third cut from the ECB in October, does that need to come through, and will that do anything to put a floor under this economy?
Well, that would be a surprise, but with the data coming in today, the likelihood certainly increases that the ECB will change its mind and cut in October. Of course, the ECB looks at the Eurozone as a whole, and Germany, in a way, is a negative outlier. So what counts is the overall situation in the Eurozone, and for the ECB, it's a balancing act between relatively sticky inflation, especially in the service sector, and a weakening economy. But with today's data, we see in the data that companies are also expecting to cut prices in Germany, and that takes pressure off inflation. So all of that suggests that the case for interest rate cut has at least become stronger.
We talk about the stimulus out of China. Could that prove a catalyst, a positive catalyst for Germany and the Eurozone in the months ahead?
I mean, the slowdown in China and in Chinese exports is one of the reasons the German economy is in difficulties. I mean, if that stabilizes, that would help. It will not alone bring positive growth rates to Germany, but it would be a stabilizing factor. Still, Germany is particularly exposed to the automotive sector, to the car market in China, and there are the weaknesses of German companies there regarding electric cars are really structural. So it's not quite clear they will benefit if the Chinese economy picks up. But of course, it would be a positive overall effect.
OK. Ifo Institute President Clemens Fuest, always appreciate it. Thank you very much indeed. Coming up, Israeli airstrikes on targets across southern Lebanon kill nearly 500 people. We bring you the latest on the Middle East. That's next. This is Bloomberg. Good morning and welcome to The Pulse. I'm Tom McKenzie in London. These are your top stories. China stimulus boost, European stocks rise after a blistering rally in China and Hong Kong as Beijing unleashes unprecedented support, including a rate cut and the biggest package yet to boost the housing market. A major escalation between Israel and Hezbollah. Israeli airstrikes kill nearly 500 people across southern Lebanon in one of the deadliest days of fighting in 20 years. Plus, another recession warning in Europe's biggest economy as Germany's business confidence falls once again. The Ifo president just told us the outlook for Germany is bleak. Let's get the latest on the Middle East right now, though, because nearly 500 people, as we mentioned, have been killed in Israeli strikes in southern Lebanon in the deadliest day of fighting since the 2006 war between Israel and Hezbollah. Bloomberg Horizons anchor Jemana Besetchi joins me now for the latest. Jemana, what do we know about these Israeli strikes, the casualties, and where things stand from here?
Yeah, well, it was the deadliest day in Lebanon seen since the 2006 war between Israel and Lebanon that went on for over 30 days. What happened was the Israeli military launched airstrikes across what they say were 1,300 Hezbollah targets dotted throughout the country. So this wasn't just specific to southern Lebanon. There were also strikes around Beirut, some of the suburbs of Beirut, and even eastern Bekaa, which is close to the Syrian border. By the end of the day, the health ministry said that almost 500 people were killed in the attacks, including about 100 women and children. More than 1,600 people were wounded. Now, the Israeli military say that they were aiming for Hezbollah targets and that many of those who were killed were members of the Lebanese militia Hezbollah, arguing that the group themselves had placed some of these private rocket launchers in people's residences. And earlier on in the day, the IDF had given a warning to many residents, warning them to leave their homes as soon as possible and as soon as they actually could, as soon as they could facilitate it in anticipation of these rockets being fired. Now, later in the afternoon, Hezbollah also responded, sending rockets into northern Israel, into Haifa. Sirens went off. Most of the rockets were intercepted. But just recapping the events of the last 24 hours, Tom, as you can see, it was a very deadly day for Lebanon, but also it posed a serious escalation because on both sides, there doesn't appear to be any appetite of them wanting to back down. OK, and just briefly before we let you go, Jemana, what are the next steps? What are we looking for next? What's happening on the diplomatic front? And to what extent should we, could we, and the warning around this, expect further retaliation, of course? Yeah, well, it appears as though there looks like there are going to be more airstrikes set for today as well. The Israeli Prime Minister Netanyahu saying, I want to clarify Israel's policy. We do not wait for the threat. We are ahead of it. He predicted complicated days ahead. Now, all this is happening during the same time as that UN General Assembly meeting that is taking place in New York. The Israeli Prime Minister is traveling there towards the end of the week. He will be delivering a speech on Friday. The Lebanese Prime Minister wasn't supposed to be attending, but this morning his team have announced that he will actually be going. The U.S. have been trying to de-escalate and bring down the temperature in the region, urging on all parties to show some restraint. But at the same time, we have heard that the U.S., via the Pentagon, are looking to send more forces to the region in anticipation of a possible flaring up. So all this is going on. The next few days will be key for direction.
OK, Jemana Pescetti, thank you very much indeed. And an important update, of course, in terms of what is unfolding in the Middle East, that increase and escalation in tensions between both sides. Jemana Pescetti, our anchor of Horizons Middle East and Africa. Now, switching focus, Donald Trump says that if he returns to the White House, his first call will be to Chinese President Xi Jinping. He has accused Beijing of failing to honour an agreement that saw the US reduce some duties in exchange for China increasing its purchases of US exports, including $50 billion in agricultural goods. The US presidential race has seen both Trump and Kamala Harris vow to take a tough stance against Beijing.
The first thing I'd do is my first call, I'm going to call up President Xi. I'm going to say, you have to honor the deal you made. We made a deal. You'd buy $50 billion worth of American farm product, and I guarantee you he will buy it 100%. He will buy it. Second thing I'm going to do is I'm going to say you have to give the death penalty to your fentanyl dealers.
OK, now switching focus, because despite today's bump higher, political uncertainty in France has upended markets, with the CAC 40 underperforming European peers over the past year. Traders are now looking to the Elysee Palace to assess the new government's ability to tackle the country's spiralling budget deficit. The countdown to the budget, of course, is in focus in France, as it is in the UK. I'm pleased to welcome now Stephane Boujnah, the CEO of Euronext, someone who has a past as well in terms of devising previous governments. That was one of your old roles, but right now, of course, CEO of Euronext. Stephane, thanks for joining us in the studio. Talk to us about the politics of France and the impacts on the capital markets of France. Before we broaden out the conversation, is it casting a shadow over the capital markets of France, the uncertainty, the political uncertainty?
Well, as you may know, Euronext is a European company headquartered in Amsterdam. I'm a French citizen, so I have skin in the game in what's going on in French politics, but I'm running a European company. Now, just to answer your specific question about France, the president has called for snap elections in July. The new parliament is divided. He is appointed following a long consultation, a seasoned politician who is experienced at home and has a great track record in Brussels in European affairs. This cabinet seems to be committed to continue the pro-competitiveness agenda and the pro-business agenda. So let's see. I'm quite confident that they will do their best to tackle what is on the table, i.e. the rebuilding of public finance, but like many European countries. So, I would not factor in political volatility as a discount on the European risk. This is the cost of democracy, like in Belgium, in the Netherlands, in Germany, in Italy. So let's look at the core of what Europe has to offer: 450 million inhabitants, great wealth, great savings.
Right. Well, the yield spread, of course, of French debt over its German counterpart suggests that risk premium is there. I mean, to many looking at the French cabinet, the French government, I will move on, but just on this, given your background as well, for many they would say it's not a question of if this government collapses, but when, given the political forces at play.
I don't want to comment that. I run Euronext. I'm not commenting on local parliamentary politics.
OK. At what point, though, do you need that political certainty in order to rejuvenate the capital markets of France? And again, I know that you're across Europe, but Paris is part of the mix for Euronext.
There is no such a thing as European. There is no such a thing as capital markets of France. There is only capital markets of Europe. I mean, this is except for public debt. The reality is that we operate in an integrated capital market in Europe. Euronext operates a single order book, a single liquidity pool, a single technology platform with 12 billion of shares, 12 billion of euro in value traded every day. So it's twice the size of the London stock market. with an aggregate market capitalization of 7 trillion euro of all the companies listed on Euronext, which is a single integrated market. We look at Europe as a single integrated market.
Have you been benefiting from some of the volatility? We saw that in the first part of August. You've seen that benefit?
Of course,
do you expect that to be sustained?
I don't know.
What's activity looking like right now?
Well, we have a very diversified activity portfolio in terms of trading. Equity markets have not been as strong as they could have been. We are fortunate enough to be exposed to fixed income with MTS, which has today 4 times the type of volumes they had when we bought the companies. We are fortunate enough to be exposed to electricity trading with no pull. So electricity and commodities markets are doing extremely well. So the integrated markets in electricity in Europe, in commodities, in fixed income are doing extremely well, even if equity markets are not as strong as they used to be. But I'm confident that when they recover, and they will come back any time, because the direction of travel of interest rates is pretty straightforward, pretty clear, we will be in the right spot.
Is that the key catalyst then for equity markets and that activity to come back?
By all means, it's a very powerful catalyst. It's not the only one. As you say, the risk profile, the underlying performance of companies is the ultimate driver of stock valuation. But clearly, the switch that is now unavoidable in terms of direction of travel of interest rates is going to be a booster to equity markets.
Sounds like you might be one of those calling for a cut in October from the ECB. It might be helpful to the business. As you project out 12 months, what's the IPO pipeline looking like? Give us some numbers in terms of what you see.
I'm reasonably optimistic because of the reason I've just mentioned on the underlying drivers of equity markets, and also because the pipeline is thick. Some deals have been postponed, but the pipeline is pretty thick for the coming year. We believe that 25 will definitely be a stronger year than 24.
Okay, 25 a stronger year than 2024. Of course, the 2024 has been pretty challenging, hasn't it, for the capital markets? Look, you talk about the benefits of this integrated market that you have across Europe. Total Energy and the CEO there, of course, also a French national, looking to list in New York. What do you make of that?
They don't look for listing in Europe. They have ADR in the US. They have a fundamental valuation problem. On the one hand, European investors are not big fans of oil and gas as they used to be. On the other hand, US investors love oil and gas. That's why they like Chevron, they like Exxon, and that's why the multiples of those peers are stronger than the one of Total. So Total is looking for a tool to attract more US investors. Large US asset managers don't need to invest in US listed instruments, but some smaller ones want to invest in US listed instruments. So we are working with them as to a tool to solve that problem. But there is no plan, as far as I understand, at Total to delist from Europe, to move their headquarters, to move their main listing venue, or even to list shares in Europe.
Where are you on that valuation gap? Is that just a structural issue that Europe's going to have to contend with, or does that start to close in the short to medium term?
Well, I was referring to the oil and gas sector. I mean, I'm not a specialist of oil and gas, but clearly the rationale or the debate around the valuation of Total is about the fact that in Europe, the ESG preferences, in particular on the E and the environment, have developed very, very strongly, whereas in the US, it's more a debatable issue, and therefore the appetite for oil and gas, both in debt and equity in Europe, has declined significantly, whereas in the US, it has been sustainable.
Okay, Stephane, always enjoyable conversation. Thank you very much for coming into the studio. Stephane Boujnah, of course, Euronext CEO. Coming up, our conversation with the CEO of mobile payments firm Boku. We discuss corporate results and the health of that fintech. That is next. This is Bloomberg.
Alongside our Business Secretary, Jonathan Reynolds, we will publish our plans for a new industrial strategy for Britain. A strategy for driving and shaping long-term growth in our manufacturing and service sectors. A strategy to unlock investment, create jobs and deliver prosperity. A strategy to help break down barriers to regional growth. Speed ahead to net zero and clean power by 2030, and build prosperity on strong and secure foundations.
The UK Chancellor, Rachel Reeves, striking an optimistic tone in her speech to the Labour Party conference, some would say belatedly. Companies are waiting to see what the new government, of course, means for the country's tax and funding environment ahead of the upcoming autumn budget. One of these is Boku, a mobile payments company founded in San Francisco but listed here in the UK. The fintech, which works with the likes of Amazon and Google, to name just a couple, just reported revenue up 24% in the first half of the year. Let's discuss the earnings story then, and also the regulatory front, the tax issues as well, amongst a number of these jurisdictions. Let's bring the CEO, Stuart, Neal. Stuart, let's start on the earnings story then. So 24% increase year on year in the first half. Give us your take on how that positions the company going forward. Is that growth momentum likely to be sustained into next year?
Yeah, good morning, Tom. Yeah, absolutely. You know, we're really excited about what the future is going to bring for the company. Our growth really comes from the fact that we work with some of the world's biggest technology companies, and we provide those technology companies with access to effectively paying users all around the world. So the more we can enable growth for our customers, the more our company's going to grow. We have some really exciting things coming on stream in the second half of the year. So, yeah, I have absolutely confidence that the growth is sustainable.
OK, Stuart, where specifically, you're a global company, you have an exposure across a number of different countries and businesses as well. Where specifically is the strongest kind of growth coming for at this point?
Well, what we're seeing is a global macro trend. You know, research from Juniper suggests that by 2028, 59% of global e-commerce is going to happen using local payment methods. So the answer is really it's happening everywhere. In the first half, we put customers live in Asia Pacific, we put customers live in the Middle East, and we put customers live in Europe. So the shift to local payment methods is really a global shift. Maybe it started in the East, in China and Asia Pacific, but it's certainly moving west.
OK, you have that touch point, clearly, with all these merchants that you have as part of your client list on the global economy to some extent, certainly the health of the consumer. So as we try and weigh up where this global economy is going, let me ask you this. With the data points that you see, Stuart, are you seeing consumers pulling back? Are consumers becoming a little bit more conservative, more cautious?
We don't really see that. I mean, what we do see, I mean, we're very diversified. So what we're seeing in one part of the world might be different in a different part of the world. You know, many of our customers are providing kind of content that is incredibly popular. So whether that be gaming, video streaming, digital downloads, online media advertising, you know, so we're seeing diversified growth everywhere. So I'm not actually seeing any slowdown, candidly.
OK, Stuart, specifically here on the UK, we're counting down to the budget. What you're listed in the UK, is there anything specifically you want to hear, you want to see from this Chancellor in this budget that would help you, help your sector?
Look, Boku is part of what we call the sort of fintech sector, and I believe that the UK has an incredible pedigree in fintech. If you think about companies like Revolut or Wise, or neobanks like Starling or Monzo, you know, I consider Boku to be in amongst that portfolio of companies. You know, we should be proud of these companies, and I'd like to see any government really do something to stimulate and encourage increased investment in the sector. You know, we have a real global advantage in fintech, and I think we should be promoting it as much as possible.
Bloomberg had a story around the DOJ, of course, the Department of Justice in the US, probing Visa over alleged anti-competitive measures within the debit card space. Just broadly, in terms of the incumbents, Stuart, and you talk about the fintechs here in the UK, are the incumbents, are they setting up an unfair advantage? Are they unfairly holding back competition in this space?
Well, I think what we do see from our vantage point is in markets like India and Brazil, central banks taking ownership of the payment system. And so in those two countries, the predominant payment method that is being pushed by central banks is what we call A to A, account to account, which means a direct payment from the consumer's bank to the merchant's bank. And you'll notice from that ecosystem that it actually cuts out the need for an intermediary payment system in the middle. So I think, to answer your question, I think this is happening organically around the world without sort of needs for the US intervention, which frankly the US is a very card-centric market anyway.
OK, Stuart, Neal, Boku, Chief Executive, thank you very much indeed on the earnings story and some of the regulatory challenges facing this space. Earnings up 24% increase year on year. Stuart, thank you. Coming up, hostile or not, from fintechs to mega banks, the bank takeover that has caused a diplomatic spat between Germany and Italy. We have the latest on, of course, UniCredit and Commerzbank. That's coming up. This is Bloomberg. Welcome back. Now, diplomatic relations between Italy and Germany have taken a turn for the worse after UniCredit moved to increase its stake in Commerzbank. The German Chancellor says it's a hostile takeover, but that has been rejected by Italy. Bloomberg's Oliver Crook joins us now from Berlin for the latest. The speed, then, of the CEO of UniCredit's approach, and some would argue aggressiveness on this deal, at least this attempted takeover, has been pretty remarkable, Ollie. Where does this story stand?
Yeah, Tom, it's crazy to think that about 10, 11 trading sessions ago, no one was any the wiser that Andrea Urschel was in the market buying up shares of UniCredit, ended up with 9% here, then says he's going to keep some flexibility with what to do with it. And everybody sort of in Germany was scratching their heads, from the government, from Commerzbank, from Deutsche Bank, to try to figure out how to deal with this problem, because it's something that really nobody anticipated. So going into the weekend here, you had the sort of finance ministry still very diplomatically pouring cold water on the deal, saying that we really think Commerzbank is better off alone. Monday comes in, the bid drops out. Halfway through the session, it comes out Andrea Urschel has bought an 11.5% additional stake, taking the possible stake to 21%, would be the biggest shareholder. We should say he hasn't realized that yet because he's holding it still in derivatives, because he doesn't have regulatory approval from the ECB to take his stake above 9.9%. But all of this in culmination, basically, Tom, has Olaf Scholz, who's at the UNGA, trying to deal with international relations, having to field questions about Commerzbank and basically saying that this is a hostile takeover, it's unfriendly, there's not a good way to deal with banking, and he considers this to be a basically totally inappropriate course of action.
Well, look, as you're suggesting, and as we see from that quote from Chancellor Olaf Scholz, this is becoming political. Both sides, Germany and Italy, voicing or at least taking a stand on this. What is the politics of this, Ollie?
Yeah, so there's the domestic issue, right? For the government, this looks terrible. It speaks to the sort of kind of disorganized nature of this sale. Commerzbank, we haven't talked really about the shareholders. Tom, a lot of people who are shareholders in banks like to make money. This UniCredit's sale potentially could make them a lot of money. How are they going to feel about it? They're going to meet with the board for the next couple of days. The unions have been outspoken. And now if you change up the board, you have Friedrich Merz coming out, the opposition basically saying that the government is incompetent, has totally mismanaged this, and it's terrible for the sector. But Tom, what I think is most interesting is you look at the international perspective on this, what the Italian foreign minister has come out and said, which I think is absolutely scathing and really speaks to some of the difficulties here within Europe. I don't understand why when someone comes to buy in Italy, they say that we are a European system, and if an Italian goes to buy out, it's no longer a single market. And Tom, I think this speaks to the heart of this question of European competitiveness, because what all of these policymakers and Mario Draghi are talking about is a more fluid, more robust way of doing business across the European continent. If the Germans come out with a heavy hand and say, no way, that sends a very strong signal about what's possible here in Europe.
Yeah, it's a fascinating story, and you've been across it all for the beginning for us with the detail, the analysis. Oliver Crook in Berlin, thank you very much indeed. Commerzbank, by the way, is up 1.7% so far in the Tuesday session. European stocks more broadly gaining 0.7%. Thank you, China, for that. Will it be maintained is the question. Up next, Bloomberg Brief with none other than Manus Cranny in New York. Stay with us. This is Bloomberg.